How do journalists explain stock market basics? Have you ever wondered how journalists break down the stock market for everyday readers? Understanding stock market basics can seem overwhelming, but journalists play a key role in making it accessible. They start by explaining fundamental concepts and terminology that define financial markets. The stock market is essentially a platform where shares of ownership in companies, known as stocks, are bought and sold. When you own a stock, you have partial ownership in that company. Journalists clarify the difference between common stocks and preferred stocks. Common stocks often grant voting rights, while preferred stocks usually do not but offer priority on assets and earnings. Another important financial instrument is bonds, which representing loans made to companies or governments. Bonds pay interest over time, providing a different way to invest. To keep things simple, journalists avoid technical jargon. They explain terms like bull market and bear market. A bull market is when stock prices are rising and optimism is in the air. Conversely, a bear market occurs when prices fall and pessimism takes hold. They also talk about market events like corrections, which are declines of 10% or more from recent highs, and dividends, which are portions of company earnings paid to shareholders. Major stock indexes such as the Dow Jones Industrial Average, the Standard & Poor's 500, and the National Association of Securities Dealers automated quotations are often highlighted. These indexes track groups of stocks and serve as indicators of overall market trends, helping audiences understand how the market is performing. In their reporting, journalists emphasize context by answering key questions. What happened in the market today? Why did it happen? How does it compare with past performance? Who are the experts or market participants commenting on these changes? This approach helps readers grasp not only the facts but also the significance of market movements. Journalists also explain related financial instruments like derivatives, which are contracts based on other assets, exchange-traded funds, and mutual funds. These options allow investors to diversify their holdings, spreading risk across different investments. From a business journalism perspective, understanding these basics enables journalists to provide accurate and timely coverage. They keep up with economic indicators, corporate earnings reports, and geopolitical events that influence the market. This ensures their explanations remain relevant and grounded in current developments. By breaking down complex financial concepts into straightforward language and using relatable examples, journalists serve as a vital link between the financial world and the general public. They make the stock market more understandable and accessible for everyone.